Oh, there we go. Okay, good evening. So today we're going to be talking about about swing trading. Okay, so today this is the swing master class. I'm going to teach you guys everything I know about swing and give you a particular example about swings in itself. Okay, you put my phone on do not disturb so nobody can mess with me or disturb me. And let's get into the training. Okay, so why swings? I want you guys to understand this. Okay, I said this at the event, but the number one way to build wealth in this country and accessible to most people as a beginner, even if you have $1, all the way to you have billions of dollars, is in the stock market. The stock market is one of the greatest ways to build wealth in the market because you begin to own businesses that have trillion-dollar implications for a tenth of the cost. For example, right now, if I wanted to go and buy Apple, okay, Apple,
Excuse me, Josh, can I ask a favor? This is Gretchen.
hey
Is
Gretchen.
it possible? I think there's some people that may not be on mute and we're getting a lot of background noise. And maybe if everybody could mute themselves so we could hear you, it would greatly be appreciated.
Thank you. Yes, please.
Thank you.
Yes, guys, please mute yourself. If you have any questions, type it in the chat. Okay. I'll try to go through this as quickly and as smoothly as possible. The chat will be where to ask the questions. I am keeping my eye out on it. Okay. So what you guys need to understand. So Apple is, if you look at the market cap, Apple is worth $337 trillion. That's the T. Okay. For you to get a scope of what $1 trillion is, $1 million is 1,000,000. $1 billion is 1,000,000,000. That means $1 trillion is 1,000 trillion. Okay. He's three of them. So he has 3,000 billion dollars is 3 trillion. Okay. You can own a piece of that company for just $223. So for you guys to understand that power and to understand what that means that you begin to have ownership of things and you're not only a consumer. I'm going to tell you guys something right now. There's two types of people in America. There's consumers and there's producers. We'll say that again. There's consumers and there's producers. And one of the best and easiest way to become a producer and not a consumer is to become an owner of companies that you know, like, and love. Okay. So why do we participate in swings and the options market and stocks? Two reasons. One of the main things I talk about is leverage. Write that down, leverage, okay? The definition of leverage is this: the ability to put in a little bit of input and have a maximum amount of output. So when we're talking about investing our time, when we're talking about investing our money, when we're talking about investing our resources, we want to make sure that we're using the highest form of leverage possible. Unfortunately, most times our leverage is limited by our knowledge. Okay. So today I want to increase your leverage by kind of increasing some of the knowledge that you guys have around the stock market and how it actually works. Okay. So that being said, let me get a little bit into my training here. Okay. What I need you guys to understand is that swinging is one of the purest form of trading. You let time work for you instead of letting time work against you. Okay. Here's the thing about between today and next week. The time is going to pass anyways. So might as well do things and participate in activities that the more time goes by, the more income or potential income you have to make. Warren Buffett said something that's so key. He said that if you're not making money in your sleep, you will work till you die. Okay. There's several ways to make money in your sleep. One of them is real estate. One of them is buying businesses or owning businesses. The other one is the stock market. But why is the stock market so powerful? And why is that one of the biggest wealth tools used in the United States? That's a great question. Because you get to access the labor of others by borrowing them your money, and in exchange they give you a piece of their company. Okay. Number two, okay, you increase your leverage, like I said, okay, and it gives you the ability to multiply large amounts of money with confidence. Okay, and I told you guys it's one of the three ways to maximize your returns in a limited time. Here's the thing you guys need to understand. One of the biggest advocates for buying the S&P 500 and, and owning the general
Here we go.
market
I'm on it now.
is Warren Buffett. Yeah, if you guys have heard about Warren Buffett, type of one in the chat for me.
Okay. Okay. Y'all want to watch something else? I don't think you.
Okay, if you guys have heard of Warren Buffett, type of one in the chat for me, please. Awesome. So you guys have heard of him. So the same person said two very interesting and seemingly contradictory statements. The first thing that he said is, if you're a regular person, diversify your income by buying the S&P 500, and buying the S&P 500 will outperform any stock you ever pick. But the same person also said this: diversification is for the ignorant. And if you're diversifying, you don't know what you're doing. So which is it? Should I diversify or should I not diversify? Which one, Mr. Buffett? Here's what I want you guys to do. Don't look at what they tell you, look at what they do. I'm going to give you an example right now. I'm going to go to this website, okay? And this website is called Smart Insiders. It tells you everything that politicians are buying and have been buying for the last several years. They actually have to declare what they're buying. So people in Congress, if you look at what they're buying and what they're holding, you'll notice something that's very, very interesting. They are not buying the S&P 500. They are buying individual companies. Why is that? Great question. Because with a little bit of knowledge, with a little bit of reading, and to be perfectly honest, with just a little bit of common sense, you can make more money than the S&P 500. But if you don't want to think too hard about it, just buy the S&P 500 and leave it alone. If there's somebody like me who actually wants to maximize my returns, yes, I buy the S&P 500, but I invest a lot in individual stocks and in individual companies. And for example, if you literally just type S&P 500 by weight, okay, it will literally tell you the top 25 stocks in the S&P 500. So instead of buying the S&P 500, I can literally just come here and say, okay, here's the top 25 stocks. Let me just buy this. This can be my diversification right here. Instead of buying all the S&P 500, I can literally come here and buy shares in the top 25 and have the same level of diversification as if I'm owning the whole thing, but with way more upside. How? Because I just typed in something on Google. What are the top 2,500 by weight in the S&P 500? Are you guys following? You force click this. Okay. Are you guys following so far? If yes, put yes in the chat. If no, let me know.
Kinda.
Okay, what questions do you have about the statement I just made?
I don't know if I have a question or if I'm just trying to catch up to what you said.
What I said is the S&P 500 is the top 500 companies in the United States. Most people will say buy the S&P 500 and wait. What I'm saying is speed and increased leverage is in the specificity. So instead of buying the top 500, S&P 500 as a whole, I can just come and look at the top 25 companies by index weight and just buy those top 25. Does that make sense? It's as if it's like saying that you're going to the grocery store, right? And you're a fruit lover, and they're like, okay, Kenneth, you love fruit. Just go to the Whole Foods and buy the whole fruit section. Versus if you said, yeah, fruits are cool, but I don't really like blackberries. My favorite fruits are apples, bananas, mangoes, strawberries. And you buy those specific fruits because those are the fruits that you love the most. Versus buying the whole grocery store and having fruit that you're so about. Does that make sense? That's what this is like. By weight, you can tell by weight how many percentage of the S&P 500 is in this stuff and how much they own. For example, Meta. Meta is number 5 on this list. It's one of the ones I swing a lot. And if you notice, I gave you guys a list of the stocks that I swing mostly, and then you see a lot of them are in the top 25. There's a reason for that. That's not a mistake, okay? That's on purpose. So now that being said, what does this have to do with swinging? Great question. You need to understand something, that if everything is left to itself, if everything else is equal, an options contract would always outperform the underlying stock. If you bought one share of Apple and you bought one contract with Apple, one options contract with Apple, the options contract will outperform the share of Apple usually by 5 times. Okay, yes, that's be 500. That's the top 500 companies in the United States. If you buy one share of Apple and then one contract of Apple, the contract will usually outperform the shares by 5 times. Okay, and for example here, if we go to Meta, okay, can you guys see how much percentage did Meta go up today? The actual stock. First of all, did it go up or
Went
did it go
down.
down?
It went
It
down.
went down 0.38.
So Meta, the shares today of Meta went down 0.066%. I want you guys to pay attention to this and get ready to let your mind be blown, okay? I have a group that I emailed. We go to the sent folder so you guys can see this. I emailed them at, what time does this say?
10:25 a.m.
And I said that we should buy Meta Swings, December 2650 call. Now, we just saw that Meta, the shares, what did they do? Did they make money or lose money?
Shares lost money.
Lost.
Great. Now let me show you something. Just so you guys can understand the difference between shares and options and why it's important for you guys to get this. I'm trying to pull up the application for you guys. Why is my thing so bugging? This is not the type of thing that should be messing up. In any way, shape, or form is gonna be annoying. Okay, give me a second. I think I texted it as well. Okay. So she wanted to do me. I got something for you. Don't mess with me right now. Perfect. I'm going to take a screenshot from my phone, from my brokerage, so you guys can see this. Okay. And I'm going to send it right to my computer so I can share it with you guys. Because this is so critical and I need you guys to get this. Oh, okay. Give me a second, guys. I don't know why my computer wants to mess with me right now. Can you guys see this? My screen meaning, yes or no?
Just see you.
Not yet.
No, we don't see the screen yet.
Okay.
What mic is that?
Did it send? Sent on my laptop, but it didn't send on my, it sent on my phone, but not on my laptop. Shaking my head. Don't be shy, I'm messing with you right now. This is crazy. Crazy work. Okay. I'm gonna show it to you guys on my phone, and hopefully you guys can see it, okay? Now let's look closely. Can you guys see that? What does that say?
$155
No,
profit.
but I want you guys to see,
Oh,
yeah,
30%?
yes, look at that.
Wow.
Are you guys all seeing that?
Yeah.
I
Yeah.
could not make this up. So how is it possible? And I just started a starting position. I'm gonna still add size to this. I sent out this message at 9, 10 a.m. How's it possible that if we look at it,
Mute.
how is it possible? How is it possible that the shares lost money, but the options made 30% in the same time?
Mm-mm-mm.
I want you guys to really think about that. How is it possible on God's green earth that that's like saying you want to buy a house, the house burnt down, but now the house became more expensive. What?
Is it because the projected value is increased and you bought it at a set projected value?
Here.
That's one, the projected value. Okay, that's one reason. Okay. Another reason is what we call implied
This is
volatility.
for you. Here.
Okay.
How picture read it? Did you
Here.
want
Another reason is, guys, please mute your phones.
No,
Please.
eat some. No, eat.
Please mute your phones, okay? So I want to try to get through this. I can't be muting phones all night, okay? If you talk real quick, and then go back on mute or type it in the chat. Okay, so how is it possible that I'm up 30% and other people are losing money? Because options and stocks are two different games. So just imagine if at this level I'm up 30%, what do you think will happen if the stock jumps up 10%? What do you think is going to happen to my options contract?
Increase in value.
It's going to jump to like 200% in profit. That's why I said that when the stock goes up 1%, by the time the stock goes up 100%, the option contract would have went up like 500 to 1,000%. So that's the difference between owning stocks and owning options. And that's why smart people buy both. If you're somebody who invests in the stock market, especially when they increase leverage, options has to be a part of your portfolio. I'm not a financial advisor by any means. Consult with your CPA and all the other legal disclaimers, but I'm literally showing you with your own two eyes what's possible. Okay. At one point, those shares were up 50% today. I was literally up within an hour of having these options. I was up 50% in an hour. Now, what would that do for your portfolio if you put 100K into that and you made 50K in 20 minutes? And this contract, I have it all the way to the end of the year. So not only do I have the speed of owning options, I have the security of time. This is the great thing about swings. Swings puts together the security of time with the volatility increase of options trading, which is why we do it. Me specifically, I started out before I ever day traded. I was swing trading. Why? Because I mean, I worked 9 to 5. That's all I could do. So that's why we leverage these things. Okay. So here's the rules you want to follow. You only want to swing reputable companies. How do I know a company is reputable? Well, didn't we just do an exercise where we just said, what are the top 500, whatever? These seem like pretty reputable companies to me. Don't they seem like reputable companies to you? They're in the top. They're the top companies in the S&P 500. So if you have to swing anything, these would be a good place to start, don't you think? I told you guys I swing 6 things. I told you guys I swing Apple, I swing Nvidia, I swing Amazon, I swing Meta, I swing Google, I swing Netflix. Where is it? Netflix, I think I told you guys one other thing, and Tesla. All the 7 tickers I swing are in the top 25. That's called a clue. And there's nothing wrong with you swinging Microsoft. I've swung Microsoft sometimes. Okay. Berkshire Hathaway is a little bit pricey, but anything in the top 25 by weight, you're usually okay to swing those. Why? Because they're the top 500 companies in the United States, and usually based on probability, they're going to go up rather than down. Are you tracking so far? If you're tracking, say I'm tracking, Josh.
I'm tracking, Josh.
Tracking, Josh.
I'm tracking, Josh.
I'm
So now
tracking,
you guys
Josh.
understand the power of options and why we swing them. There's two type of swings that you can do. Write this down. This is key right here. If you don't hear anything I said tonight, hear this. There's short-term swings, what I call cash flow swings or mini swings, and there are legacy swings, which are swings for your overall portfolio and to build you a legacy. What's the difference? Cash flow swings, I'm usually swinging them for an expiration of a month or two. Legacy swings, I'm holding anywhere from 6 months to 2 years. Okay. Cash flow swings, I'm swinging them from anywhere from a month or two. And the shorter I can go, the better. Because the shorter I hold them, the more the percentage increases. For example, this meta ticker, if you guys can see, I'm going to show you guys right now so you guys can see the expiration. What day does it expire right there?
December 24th.
Exactly. So just a month. I'm holding it for a month, and I'm already up 30%. This is a cash flow swing. Okay. These swings are meant to increase cash flow and to multiply portfolios as fast as possible. Remember, I told you the two benefits of swinging is that you have the time and the patience of holding long-term stocks, but the volatility of trading options. The longer the time, usually the safer the investment, okay? These are my terms, Destiny. These are my terms, okay? Yes, cash flow swings and legacy swings. And I named them that because of what I used them for. Okay, so if I'm trying to generate quick cash flow, a quick 30, 40, everything, I'll give you an example. For me personally, if I'm getting into a mini swing or what I call a cash flow swing, I'm looking for anywhere from 50% to 200% in 5 to 7 days. And I know you're like, is that even possible, Josh? Can you do 100% in 5 or 7 days? It's totally possible. Not only is it totally possible, you can do it with the same stock over and over again. Want me to prove it to you? Say, prove it, Josh.
Prove it.
Okay, I'm about to prove it right now. Yeah, I was thinking, Cookie, I got some skeptics. I'm going to Instagram right now. If any of you guys follow me on Instagram, I made a post. Let me see here. How do you search on this app? Let's do search together. And here's another one of my friends. Look at Wall Street, okay? He made all of his profits through swinging. Everything he showed, everything he's doing is literally what I'm showing you how to do tonight. So this is prophetic that you guys are seeing my good friend Wall Street like portfolio, okay? So let me just type in Joshcashflow. And I did something, I made a post that's so key, right? I said, money in your sleep. Okay, look at what I did. What company is this?
Meta.
How long ago was this post?
Last week.
So I got into Meta, sold it, and then got back into Meta a week later. You can literally play the same stock over and over and over again. Look at how much I made in Meta in literally 2-3 days. I didn't even put the last update. Oh, snap. I'm going to show you how the last update in Meta right now. In 4 days of holding Meta last week, this is how much percentage I made on it. I took a screenshot so you guys can see. How many percentage is that?
108%? Wow.
Yes. In 5 days. Okay,
And you had it out for a month? You had it for a month?
I had that one out for like a month, yes. Okay, so I'm showing you guys what's possible. Now I'm gonna show you guys how to do it. I'm gonna explain the rules. I'm showing you guys what I'm doing. I'm showing you guys how to do it. Pro tip, any profit you make in your Roth IRA account is tax-free. So if you have a Roth IRA, you're able to contribute somewhere between $7,000 to $8,000 into that Roth IRA every single year. Any profit you make onto it is tax-free, which means if you turn $10,000 in your Roth IRA to $1 million because you swing trade, guess what? That whole $1 million in profit is tax-free. So I like one of the things I like to like start Roth IRA accounts, put in like $7,000, see how much I can grow it to. And I'm literally building it for my legacy and my children. So like my children, they have one. I'll trade their Roth 401k, their Roth IRA account, and I will swing that through options. And by the time they get a hold of it, all that money is what? Tax-free. Okay? And it's literally a skill, 108%. So I'm proving it to you guys. When I'm doing mini swings, 50 to 100% is 200% what I'm looking for. When I'm doing legacy swings, I'm looking for anywhere from 30% to 150%. It can go higher, it can go more. I've seen legacy swings go 300% as well, but these are my minimums I'm looking for. Why? Because the more time I give the options, the slower the increase happens. You tracking?
So when you say a minimum of 50 to 200, do you mean like as it's in the swing, you're watching it to see
Percent.
if it reaches that 50 to 200? So like that one that you just showed us, it reached 108. So you came out.
I took profit, exactly.
Okay, got it.
And I was
Thanks.
in it for 4 days, 5 days max. My partner Wasi said something. He said, he always says, how many people on your phone do you know who can multiply money? This is one of the ways I do it. I know if somebody gives me money, I can multiply it. I do it for myself. I've been doing it for myself for years. Okay, and the safer I want to be, the more I take advantage of these type of swing trades. So remember, there's the mini swings or the cash flow swings, and there's the legacy swings. Okay, now the goal of this is that the cash you produce from the mini swings, you convert it to legacy swings. Okay, and this is how I usually split my stuff up. I'll buy 70% stocks and 30% long-term options. So for example, let's say I made $1,000 on this mini swing play. I'm going to buy $700 of, let's say, Microsoft shares and $300 of Microsoft swings, anywhere from 6 months to 2 years. Are you guys tracking? The percentage of cash flow swings is 50% to 200%. Great question.
Yes, Josh, I did have a question. You was mentioning something earlier. You said, I think you said the longer that you hold the option, the slower the money.
The longer the expiration on the options, the slower the percentage increase on your money or your contract. So for example, you guys see I'm up 30% on this meta swing right now, right? That's because it expires in December. If this was if I got into the same trade, the same meta swing, but I did it for December 2025 of next year, instead of being up 30%, I might only be up 3%. Does that make sense?
Is that because
But each,
time decay or something else?
so time decay is one of them. So there's Greeks. I don't want to go too deep into the explanation, but yes, it's because of time decay, the amount of time you have on the options contract. So because it's considered safer, the percentage increase is not as much. But this is a great place if you're planning to swing 100, 200, 300, 400, 500 grand and want it to be more safer. This would be a great place to do that. Okay, are you guys following? Yes, that's the cash flow swings equals mini swings. Okay, are you guys tracking?
Yep.
Track.
Stay with me, guys. I know it's a Wednesday night. Stay with me. Y'all
I'm-
asking this.
Oh
I'm
no,
tracking.
we quiet because we soaking it in.
Yeah, right. And typing it in. I'm tracking.
Okay, perfect. So
Shit, I don't understand it fully yet, but I'm gonna go back on a recap.
yes, and if you have questions, type it in the chat. Okay. So when picking options contracts, there's three things or three factors that you guys need to know. The first thing is direction. Do you think it's going to go up or do you think it's going to go down? Obviously, this is very basic. If you think it's going to go up, you buy what?
Calls,
Calls. And if you think it's going to go down, you buy what?
puts,
Puts. Great. The second thing you need to figure out is the contract expiration. How long do you want your contract to last? Okay. You can pick with a lot of these swing trades anywhere from 1 week all the way to 2 years. Okay, I want you guys to take note of this. You can pick anywhere from 1 week to 2 years as an expiration. Remember what I said, the longer the expiration, usually the slower the percentage gain. So finding a happy medium is key. I'll give you an example. Nancy Pelosi in December 2023, in November 2023, November 22nd, 2023, bought 50 call options of NVIDIA at 120 strike price. She bought $1 million in options and about $5 million in shares. Are you guys starting to see that ratio when I say 70-30 shares to options? Okay. Here's the key. In the same time period, her $5 million in shares turned to $15 million in shares, but her $1 million in options turned into, I actually did the calculation right here. Okay. There's this website called Options Calculator. And I did this ahead of time to save you guys time. Where is it? So it turned to about 1,103,000 $1,103,250 times, I'm running too many applications. Okay. Her 1 million in options contract turned to 55 million. Let's do that again. In the same time period, she turned $5 million of shares into $15 million in shares, but she turned $1 million in options to $55 million in options in the same time period. Now you think about the difference in leverage. From 1 million to 55 million, or from 5 million to 15 million. Which one sounds like a better day at the office? If this thing don't stop popping up, I'm gonna fight somebody.
Now, I have a question, Josh.
Never.
So, can you hear me?
Yeah, go ahead.
Okay. So if the option gives you more, why is it that we put less in the option and more in the stocks?
Great question. So options, when you buy them, when they multiply, you're getting a lot of cash flow back. Now, let's say you have $55 million in cash. Because they expire at some point, now if you're going to go and buy shares, now you're going to be buying shares at the new price, not at the old price. Does that make sense? So, for example, let's say she bought NVIDIA shares at $450, which is what she bought them at, right? And at the same time, she bought her options contract. Guess what? Now NVIDIA is $1,500 per share. Let's say she sold $55 million of those contracts. Now she's buying shares at this price versus this price. You see the difference?
I think she was asking why buy as many options. Why not buy more options than stocks?
That's what I'm showing you. That's literally what I'm showing you. Because when you eventually sell your options contract or you convert them into shares, you're gonna be buying those shares at a higher price, okay? Number two, you're having ownership in the stock all the way through. So as stock splits happen, like it did in NVIDIA, your ownership share also increases as well. Okay, remember the key is to own as much as possible. So I'll give you an example. I say 70-30 shares to options, but you can easily go 60-40 or 50-50. There is no hard rule to this, okay? It's a personal option. I'm just giving you guys a recommendation of what I personally do. At least till you get to a certain point. Once you have $1 million in shares, then I will start saying now you can be a little bit more flexible, buying more options versus more shares. It's all a personal decision. Hopefully that answers your question. Okay. So where was I? The parts of an options contract. You have the direction. Okay. The direction, which is calls or puts going up or down. You have the expiration, 1 week to 2 years. Okay. And then you also have the strike. Okay. The strike price is the price that you agree upon the contract of the stock getting to. So for example, if Apple is $150 right now, you can buy an option contract like say, hey, I think in 2 years, Apple's gonna reach $200. So you can buy an options contract for $200, even though you think Apple is $150 now. That's what's called the strike price. Now, here's the key, and pay attention to this. I'm gonna say this real slow so you guys can understand this. If Apple is $150 right now, the beautiful thing options lets you do is you can buy a strike price of $200 saying, hey, in a year or two, I think Apple's gonna get to $200. Or you can go buy a strike price of $100, even though it's Apple's $150. So you can actually go back in time and buy options for prices that Apple's already at. Are you guys tracking? So because this buying options at prices that Apple was already previously at is called in the money. Write this down, it's called in the money. So if Apple is at 150 right now, and you buy an options contract that Apple is going to reach 100, because Apple's already past $100 per share, it's called in the money, and this is considered a safer investment. If you're saying, hey, Apple is 150 right now, but I think you get to 200 in a year, this is called outside of the money or out the money. And is considered a more riskier investment. 80% of people who trade options are trading in the money contracts. 80%. And I'm going to tell you now, listen to me and listen to me closely. If you buy an in the money contract, I'm going to slap you. Can I say that on camera? No, I can't. Guys, I can't remember. I can't listen.
You said it already, man. Heard you.
Shisha. I'm speaking Chinese now, okay? Do not be buying in the money contracts. Don't do it. Most gurus will tell you to do this, and I have friends who buy in the money. They think it's safer, but they're literally shooting themselves in the foot. You're literally defeating the leverage, and the safety you think that you're getting doesn't actually really exist. I've tested both. I'm telling you. If you buy a call option and that stock does 50%, whether you're in the money or out of the money, you're clapped anyways. The difference between me and you is like, let's say I lose 50% on that trade, you lose 35%. You feeling better about yourself because you lost 35% and I lost 50%? Oh, I'm so smart. I didn't lose as much as Josh. Oh my gosh. But here's the difference. If it goes my way, the out of the money contract is going to go up 3x, and your in the money contract is going to go up 50%. Now you tell me, why in the heck would I do in the money contract? It makes no dang sense. You're literally shooting yourself in the foot. Take a gun and shoot yourself. Boop, boop, boop. If the point of this game is leverage, you're literally using anti-leverage. Now you guys get in Josh after dark. I'm not politically correct after 8 p.m. So y'all strap in, okay? Put on your seatbelts, okay? So that's called out of the money. If you notice, my meta trade right now, meta is $572. If you look up, let me log in. See, that's how you know this is real. I'm literally logging into my account. Okay, if you look, what is the strike price there? Can you guys read that? You try to make it a little.
I can't tell.
Yeah, you can't tell. Let me make it a little bit clearer. That says 30th of
190.
December.
Oh,
six-
$190. No, that's your P&L.
Right, 600.
Yeah, it's at 650 call. See the C stands for call? Great.
Okay.
Facebook is 572, but I bought the 650 call. I bought out of the money. And because I bought out of the money, I'm up 30% while the stock market is down. If I bought in the money, I'll probably be at break even right now, if not in a loss. That's the difference between in the money, out of the money contracts. So if you're going to swing, which one are you swinging, in the money or out the money?
Out.
Out the
Out
money.
money. But I'm still confused at that math. Like I don't understand. I still don't understand how. But I could just Google it later, I guess.
No, I asked the question.
How far out the money do you go? I mean, because the sky's the limit as far as out the money you can go. I mean, how do you know which strike to pick?
Great question. I'm going to show you guys that in a second. Okay. Okay, we'll show you guys that in a second right here. I get in the right place. I'm giving away all my secrets tonight. The heck? What's going on?
That's right. Give up the secrets.
I want to cry. Oh my gosh. I'm just thinking about my life in swings. It's been amazing.
Hey, Josh, will we be able to have a recap of this video?
A replay?
Yeah.
Do I like you guys enough? Yeah, I'll send out
Absolutely.
You love us
Yeah,
because
but
we're your biggest fan.
I'll send you guys a
Yeah.
replay.
Cause quit playing, Josh.
You were
Yeah, I'm
blessed
still
to
a
be a
little bit
blessing.
confused about all of this.
Well, that is a good portion of that 14,000 open interest at 600. I don't know. I'll get to that. I get what you're asking for. I'll get to that in a second. So there's a direction, there's the expiration, there's the strike. Okay. Then you have to choose in the money or out the money. Are you guys tracking so far? Great. Now, the way we determine the options to choose is by two words. The first word is open interest. Write that down. And the second word is volume. The volume of any given options contract is how many people bought that contract that day. Okay, that's the volume. So if 100 people bought that options contract today, the volume would be 100. The open interest is how many people own that options contract in total. Okay, so open interest is how many parties have an open interest in that options contract. That's why it's called open interest. So is the total number of outstanding contracts on that strike, and volume is the number of people who bought that particular day. So for example, on my meta, on my meta swing, the open interest was, let me go to it, December 20th. Okay. And let me just open interest and value. Is it there? Perfect. I did the 650 call. Okay. The open interest on the meta swing, this that I got, was 4,117 contracts. And the volume today was was 338. Okay, so tomorrow it's gonna say the open interest is what's this plus this? Tomorrow it'll say the open interest is $4,457. Whatever the addition of this, that'll be the open interest, and then the volume will be how many bought that particular day. Are you guys tracking? Okay, great. Now, here's the key to out of the money. I literally don't know what happened today. My Think and Swim, I was literally charting right before this call. It literally just crashed on me, and I don't know why. And I'm trying to open it up so I can show this to you in real time because it's important for you guys to see this. Because I can't show this part to you on my phone. It says Think and Swim encountered an error. Okay, give me a second. Let me try to fix this Think and Swim thing. Okay, I'll first quit that. Let me open it. Alrighty. So I've run over. I've went over calls, puts, open interest. What else do I need to go over for you guys? Yes, how to pick the contracts. Great. Here's how to pick the contracts. Okay, write this down. How do I zoom this up?
Josh, if you want, I can share my screen.
Oh, who said that?
It's Ray.
Ray, thank you. Can you share your screen, please, Ray?
Yes, sir.
You're such a gem. Let me allow you to share your screen. Let me allow. Okay, can you share your screen now, Ray?
Yep.
Well, I know you guys are asking a lot of questions.
While we do that, can I ask real quick, Josh?
Yeah, sure.
You were saying the open interest in the volume.
I gotta stop sharing so you can share. Go ahead.
You were saying the open interest in the volume, right?
Mm-hmm.
But how do we know?
He's about to show us.
All right, maybe that's what you're about to show us.
Ask the question, so I make sure this is what I'm about to show you.
All right, how do we know what we're looking at when we're trying to figure out? All right, the open interest is X, and the volume is X. How do we know that that's the point in which we need to go at it and for a call or a put?
Great question. So what I'm gonna do is
Go try to request control, maybe.
No, just try. I've done it now. Try to share your screen.
Oh, it's not sharing. Y'all don't see the.
We
No,
see
we
it.
don't see it. I just
We see
enabled
the
it.
screen.
I can see it.
Yeah, we can see it.
Oh, yeah, I can see Ray's screen too. Okay. I know. I told you about me with this technology. Perfect. Okay, awesome. Thank you, Ray. You're such a blessing. Okay. Now, what I'm gonna do here, Ray, is I'm going to grab a Can you guys see my mouse here?
No.
No.
Okay, I'm gonna request remote control to your screen, Ray.
There we go.
You approved it? Okay. You guys see my mouse, right?
Yeah.
Yes.
Okay, great. This is December 2024 contract, okay? Ray, did you get this trade with me?
Yes, sir.
You're funny. So December 2024 meta contract, this is the one. Now, Open interest, I told you guys, is the total amount owned of that share. Volume is how many bought today. Now, if you look to the right side, some numbers will pop out at you. Look at this. How does something that's out of the money have more people buying it than something that's in the money? Almost 3 or 4 times. You guys see this?
Yep.
This number right here has 14,695 contracts, and this one has 4,281. This is at the money or in the money. This is out of the money. This tells me that somebody knows something about this contract that I don't know. So that means that I'm going to do what? If I'm thinking that the market's going to go up, this is the contract I'm going to buy. Not only that, look at how many people bought it today. You guys see that?
Barely. This is real small with the screen.
11,916.
11,960 people bought it today, and 14,000 people already own it. Today alone, this contract doubled in size. So if I was to go to buy anything, this is what I'm going to buy. Why? Because this lets me know that somebody's putting millions of dollars behind this contract. If you really want to know how much money is in this contract, you take the open interest plus the volume. So that would be like $26,000 in $26,000 in total, and you multiply it by the ask. So if you say 26,000 divided by 1,300 is 1,300 because every contract holds 100 shares. So if it's $13 per contract and there's 100 shares in here, that means that this contract is going to cost you $1,300. So if you say $1,300 times 26,000, that'll give you a total of
A lot.
$34 million about. Nobody's putting $34 million into something unless they know something. Can we all agree to that?
Yep.
Yep.
So if I'm going to buy one, which one am I going to buy?
But you bought the one that would have 4,000 interest. So what's the difference? So
Great question. I'm going to get to that. If I'm going to buy one, this is one I'm going to buy. But if I don't like the price, I don't want to pay $1,300 per share, then I'll look for the next closest one at the price I like. So for example, if I didn't buy this one, the next one I will buy is this one. You see there? 4,076. You see that? You guys see that 4,076?
Yes.
What about that one that's at 41? 40, because it's more than a 4,000. Oh, wait, you know what? Never mind, because of 37.
This one right here, this is the one I bought.
Oh,
You see,
wow.
it's more than this one, a little less than this one, so it's right about the middle. So this one I bought, I was comfortable with the price, and I was also comfortable with the open interest and the volume. So usually sometimes people do what they call contract stacking. What do I mean by that? They'll buy one of this one, they'll buy one of this one, and they'll buy one of this one. Are you guys seeing that?
Yes.
Great. Are you guys seeing that?
Yes.
Perfect. So you just, as long as it has a lot of open interest in volume and is as close to the money as possible, you can pick any one of those 3 contracts, and they would have been good buys. And look at that. They all had around the same amount of implied volatility, which is good, okay? But one thing I'm going to show you guys, one thing I'm going to have you guys notice is this, that as time goes on, I like to buy stuff that I can buy multiple contracts. If I only had $1,500 to trade with, I'd rather go lower and buy multiple than just buy one. The reason is, once I go up over 100%, I like to sell half and keep the rest. Why do I do that?
Guaranteed profits.
Thank you, Ray. Guaranteed profits. If I buy one of this, let's say I buy one of this and I go up 100%. I only bought one, so I have to sell that one. And now when I sell it, I'm out of the game. What if it was meant to go up 600%? But if I buy 2 of this, If it goes up 105%, I can sell one, recoup my original investment and some, and then the rest of it is what we call infinite return trade. You have no risk on the table. Everything in that trade is 100% profit.
Oh, okay. So you always buy at least two.
I always buy multiple. I don't buy one. It doesn't make sense. Because if it does what you want it to do, then you're in a pickle. Should I sell it now? Should I hold it? Should I hold it? Should I sell it? So usually I like initiating positions with 2 or 3 contracts, and I like to add over the next 2 or 3 days, depending on how long the contract is. Like the meta position I started out with 2, I didn't know it was going to jump up for 30, 40% in 6 hours. But Ray would tell you that's just been my luck. Right, Ray?
Yes, sir. It has.
Every time I buy something, literally within 6 hours, it just pops up 50%. I'm like, oh my gosh, I wanted to buy more. But you guys are seeing what's possible with this. We can go to another stock. So this is for a short term. Let's say I believe in Apple long term, okay? And I want to buy Apple for 2 years from now. It's the same math. I could go to Apple of January 2027. Look at this. Okay? All this is in the money. Remember that. We don't want in the money. Let's look at out of the money and see which contract we will pick. So the closest contract that I like, honestly, is maybe this one right here. Okay, this one is not bad. And this one is not bad right here. Okay, so 280 call.
Josh, can you move the screen over a little bit? We can't see what is on the left side.
I don't understand what you mean by that, Gretchen. I'm sorry.
I can only see like the percentage of 21.59, everything to the left of it. There we go. Thank you.
Okay, so 756 open interest, 60 volume. I want you to notice something. The longer out you go, the less people are buying those contracts. Are you guys noticing that?
Yeah.
Okay, so you have to adjust your eyes and say, okay, relatively speaking, which one makes the most sense? Okay, so this is how you pick contracts. So if I want to hold something long term, I might not do 2 years, I might do 1 year. So instead of 2 years, I might go, okay, instead of January 2027, we're in 2024. Let me go December 2025. Okay, and now I'll say, okay, let's look at it. Where does it make the most sense? Some of it already sticks out at me. Look at this, 13,000. This one sticks out to me right now like a sore thumb. This one right here, this one right here, 7,600. You start to see how the numbers just tell you which contracts to pick.
Yeah.
Okay. And look at this. You can control Apple at a 310 strike for only $400.
This is like easier than day trading. You don't even have to do any work. You just go to the chart.
That's literally the point.
Just go to this
Right.
chart. What? Okay.
The difference between day trading and this is with day trading, you make your 30%, 40%, 100% in minutes. This, you put your money, you leave it, and then you forget about it. Okay? You check it every day or so. Depending, like in my mini swings, I watch it every day. My long-term stuff, I just let it do what it does. Obviously, because it's long-term. I don't need to monitor it as much. Okay? So the question goes to how do I now pick? Does everybody understand how I pick these contracts?
Yes.
If I'm understanding it, you're mainly looking at the open interest
and the volume.
and the volume, right? When you have that big open interest of the 300 and you had the 13,000 rather, and you had the 56, it looks like, 56 volume.
Yeah.
It looks like what, $1,500 that you get that for?
Yep. So this one will be $1,500, somewhere between $1,500 and $1,700 per.
What was that equation that you said earlier? You said open interest plus volume divided by something?
No. So what I was saying is that volume is the people who bought today. Open interest is the people who hold it in general. Tomorrow, this 56 will be added to the 13,000.
Got it.
You get what I'm saying? Because they bought today, but they will roll over into the open interest.
Okay.
Does that make sense?
It does. And then would you say you're more interested in open interest?
Yes, I focus more on open interest because that's the amount of people who own it in total.
Okay.
Does that make sense? Would you rather know
does.
how many shares Warren Buffett bought today or how many shares he's been buying for the last 10 years? Which number is more important?
Today.
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 No, you want to know how many shares he's been buying the last 10 years. I'll give you an example. If Warren Buffett bought 100 Apple today and two Nvidia today, you might say, oh, Warren Buffett likes Apple more. But if you look and he owns 1 million Nvidia and only 200 Apple, which one are you going to buy now, the Nvidia or the Apple?
The
Fair
NVIDIA.
Exactly. That's what the open interest is the total outstanding amount of contracts for that particular strike price. Does that make sense? And if you want to have a slight idea of what this contract can turn into, so let's say you buy this contract at 1,500. If we get in the money, for example, let's say, so if Apple in the next year goes from $220 to $250, your $1,600 is going to turn to about $3,200. You're literally going to double your money if this goes in the money. So that gives you a rough idea of how much you will make if this trade actually, goes from out of the money into the money. Your money literally gets doubled. Okay.
I have a question, Josh.
Yes.
But I guess so. How have you, I guess, lost money in swing trading? Because, like, is that possible? I mean, obviously it's possible.
Yes, of course, it's very possible to lose money in swing trading, of course. But remember, the more time you have, the safer it is. I lose more money quicker on the mini swings because I'm only holding them for a month. But usually, if I'm down less than 25% or 30%, I cut it. So if I'm risking 25% to make anywhere from 50 to 200%, you just do the risk to reward ratio of that. That's like a 1-to-4. Does that make sense? Look for direction, yes. Expiration date, yes. Strike price, open interest and volume. You got it, Destiny. That's what I look for. Now, the question is that how do I know when to enter the trades? And you ask, how do I know when the stock will move? With swings, you can control when or how the stock will move and how quickly it will move. All you can control is your positioning. Once you get it at a good price, let the thing do what it does. Like I told you, I didn't know I was going to be up 30% in a trade that I bought 5 hours ago. I never control that. It just happens to be my luck. I'll just begin those joints like as soon as I buy it, 60%. I'm like, oh my goodness, what is going on here? Right? So Ray, go to your chart for me. Make it one chart for me, please. On top. So how do I know what trades to go into? Great question. Type in meta. I usually look at my swing trades on the 4-hour and the daily time frame. So if I go to this is the daily time frame of meta. How did I know to get into meta today of all days? Great question. Zoom out a little bit for me. Zoom out a little bit. Zoom out. This is perfectly fine. Great question. So you guys, that trade where I got Meta 100%. This was the trade right here. I got into Meta right here, and I took it all the way up here. That's how I made 100% in 4 days on Meta. Then obviously it came back down. But what did it retest here?
That 554 level.
That 554 level, that demand zone. Okay? So there's a demand zone here. There's a demand zone here. Okay? Meta came back into it. We had a double bottom, so I went long. Simple as that. Same trade confirmation you look for day trading is the same ones I use for swinging. Supply and demands are super powerful here. Look at the 4 horsemen set up right here. Look at that. Are you guys seeing this?
Yep.
Yes.
If you caught this 4 horsemen set up and you swung this for a month, just imagine how much money you would have made on the way up.
Jeez.
It's just like you told me, Josh, at the training, that once you learn to trade anything, the principles apply to all of it.
Exactly. It's the same thing. Okay. Another thing I like to trade, if you want to keep it simple for yourself, trend lines. If you haven't been through our university yet, trend lines are super simple to follow. I'll give you a perfect example. If you draw a trend line like this, right? From here. You guys see this trend line right here that I just drew?
Yep.
Yes.
Great. As soon as we open above it, what do I do? Buy calls or puts?
Calls.
That's it. And I would still caught this whole move up. Are you guys seeing that?
Yes.
So if you just master trend lines, you're good to go. That's literally, look at this trend line right here. We broke it, we pushed up for 2 days. Take your profit, you're gone. So even if you haven't mastered supply and demand zone, if you just master drawing trend lines, you can make a lot of money. Even to the downside. Okay, let's say to the downside here, right? I want to draw a trend line. You guys see this trend line right here? Boom. Okay. Look what happens when we broke the trend line right here. Look at that. We would have caught the whole flush down. Are you guys seeing that?
Yeah.
Yep.
Okay. So if you take any ticker and you just do simple analysis, the larger time frames protect you, because if you're buying on the daily, that's why I say I only stay in the trade for 5 to 7 days. Usually when I do my charting on the daily, in 3 to 7 days, I should get my move. Like, if you could just draw simple trend lines like this, look at this trend line.
This is not a eyeglass.
As soon as we broke above it right here, once I see this, I was like, okay, guys, I like where we are on meta. My target will probably be up here, maybe. But even if we don't get there, I know we should push up for a few days. Now I'm saying, okay, I want to go along here. Now let me go to my trade station, type in Apple, look for something from a month from now, which would be December 20th. And then I'm looking for the best contract to buy, which would have been, this one would have been good, 24 cents. $24 is too small, okay? You want to buy something that's at least a couple hundred. So I might do something like this. Look at that, 28,000 open interest, 10,000 volume. That's what I would have bought. And then look, Unicart 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days of bullish action. But in the first 3 to 5 days, I would have got the pop I needed. Boom. Made my 100 to 200%, and I'm gone. Hasta la vista.
So do you just okay, so you'll still go out a month and get a month contract, but you'll still pull out early once you reach your profit target?
Yes. Or once I'm over 100%, what do I do?
Lead runners.
You buy
I
one
sell
and
half.
yeah,
Take
sell
half
And I let the
and
rest
read
go.
it.
right,
Exactly.
right.
Okay. Another thing I want to tell you guys is that in the options world, contracts expire every 3rd Friday of the month. So that's why if you go to the trade, you will notice some say weekly and the others are white. Every 3rd Friday of the month, those are the most popular contract expiration dates. So those are the ones you always want to swing. Not the weekly ones, the ones that are white every 3rd Friday of each month. So for example, November 15th is next week, but I feel like a week is too short of a time for me to have my contracts. Okay. I like to have at least 2 weeks of space in them. So I'm forced to go to December 20th. Does that make sense?
Yes.
Okay. And so on and so forth. You always want to give yourself at least 2 weeks on these contracts. So whichever date falls into that are the mini swings. That's what you want to look for. Yes, you can make more money if you do the weeklies and it goes your way. But if it doesn't go against you and it takes time, your contracts are going to get clapped super quick.
So like from this view, how do you determine if it's a call or a put that you're buying?
Based on charting. If I draw a trend line and it broke above it to the upside, how do I know where I'm doing calls or puts? Am I doing calls or puts?
If it
Yeah, but
breaks
like
the trend line.
But like it, so okay,
I
so
think she's
if
talking about the contract.
yeah,
Sorry.
in the contract. Yeah, thanks.
Yeah,
Raj.
if it breaks the trend line and then I think it's gonna go up, I'm gonna buy calls. And
Yeah,
the
but
way
like,
I know
how do
it's
you?
calls or puts is on the left side is calls. On
Oh,
the right side is puts. It's literally right on top.
okay, I didn't see that. Thank you.
Okay, guys. Yep, no worries. So if you just want to put your money and just let it sit, this is it. Here's a rule I usually give myself. I never put all my money on any one given trade because I'm not perfect. So I'll usually give myself 2 to 4 chances. So for example, if I told myself, okay, I have 20K to swing, I'm not going to be putting 20K per swing. That doesn't make any sense. What I would do is break it into 4 pieces, and now I'm doing 5K per swing. Each swing gets an equal amount of money, and this way I'm compounding my account slowly. Does that make sense? That's how you keep yourself safe, and it's an extra precaution you take. Now, I would not lie and not tell you that I have put in 80 grand in a swing trade and just left it there. I have done that. And I did make 100% on it. But on that trade, I gave myself 6 months. Are you guys starting to see how this is start to think?
Yeah.
I have a question, Josh. I don't know if you answered this already, man, but I got my kids, so I really couldn't hear. Is it any way that we can practice? Like, does this has an option where we can do paper trading with this to practice?
Yeah, so this is a real account. You can log out and log into Thinkorswim paper account and just buy it. So for example, I took my paper portfolio to give you about 200,000. I took it from 200,000 to about 500K in like 3 to 5 months. That's when I knew, let's go, baby. It's time to start using real money. Because I've just done it so much. So yes, paper trade this. And you're thinking super, you can practice too.
Thank you. And can you? I know you said that the options is on those sides. Can you? Is it possible that you can demonstrate a paper trade for us, for example, to show us how to do it? Is that possible?
So this is not my Thinkorswim. I can't log in and out. But if you Thinkorswim and when you log in, it'll try to either log into live trading or log into paper trading. And then you click the paper trading side. If you want help, reach out to support. They can help you. Just click support, reach out to them. They open 24/7. They can help you get into paper trading if you need help with that. Okay. I don't want to spend too much time on tech. I want you guys to kind of understand the strategy and what I'm actually doing. So you guys now know that I'm like, for example, you guys know that we're in this meta swing, right? Okay, great. Here's my rule. As long as I'm not up over 10% on the contract, I don't mind adding size.
Say that again. Sorry.
As long as I'm not up over 10% on the contract, 15 max, I don't mind adding size. So for example, the meta swing, I bought 2, right? I plan to add more size throughout the day. By the time I looked up, I'm up 35%. I can't add size, it's too far gone.
Gotcha.
Does that make sense?
It does. I'm glad you mentioned that. That was going to be a question I had.
Yeah, it's too far gone. And we have the 650 strike for meta, right?
Did he say cannot?
So just imagine, this is meta now. We're on the way up. Imagine once we get all the way back up and break through this. Oh my gosh, we're about to break. I'm excited. I'm sorry.
So how do
My
we get
current win rate, Destiny? Ray, you can answer that. Ray, what's my current win rate?
For how many? For going back how far?
Going back from the very beginning, since you joined like 8 months ago or 6 months ago now. What's my win rate?
100%. 100%.
100%? Congratulations.
Yes,
There
sir.
you go. I'm 100% Destiny.
How do we join the special email to get the
I'll
Josh
get to that in a
trade
second,
secret?
guys. I'll get to that in a
Thanks.
second. But I want to show you how to do that. Now, I'm not always 100. I don't know what type of streak I'm on right now. I'm on fire. I'm not gonna lie. But I'm usually pretty high in percentage. That's why I give you guys rules to manage your trades, split out your money evenly, and as you add more size and as you increase your profits, you start to make grown people decisions, buying shares and buying long-term options, so you can start building wealth. Does that make sense?
Yep.
And there's something freeing about buying shares with profits, because no matter what happens to the shares, you're not too worried about it because you bought it with profits, not with your money. That's what I like to call a wealth machine. My money is making me more money, and my money is making babies, and my babies is making more babies. So if I'm up over 100% on a share, I can now go and buy shares and not even think about it for years because those shares were bought with profits. Okay? That's why I love my mini swings so much. Quick cash flow plays, and I'm going to go into the leads. But if you have a lot of cash now, you can buy both. You can go straight into leads. There's nothing that says you have to start with the short-term gains, okay? So the 3 ways I get into trades, I just showed you one. Trend lines, write that down. Okay? I'm usually looking on the daily or the 4-hour chart. I love the daily because it gives me more time. The daily, the 4-hour, or the monthly charts is what I'm looking at to buy my swings. I determine how to get into my swings based on trend lines. I just showed you guys that. Supply and demand zones, that's the second one. Okay. And fear of value gaps, pretty much areas of interest. Like, for example, okay, there's a supply zone here. Hit another supply zone, we came down. Okay. Are you guys following? And this could go for any ticker, NVIDIA. Okay. Look at NVIDIA right now, right? And we literally draw a trend line right here, from here to here. As soon as we broke here, I could have went long. I could have bought calls and did a mini swing. And look at the result of NVIDIA. Okay. If you bought NVIDIA here, and now it's here, I don't know how many you can bought this if you bought this on October 8th, it's now November 8th, so just a month later, the stock went up 40%. What do you think would have happened to the options contract at the same time?
Jeez.
Exactamente.
100%.
That's why I like to buy more than one, because I like to stay for the ride. I like to milk it, Since I started doing the call alerts group, I'm a little bit more conservative because I know you guys are joining me. More than 300 to 500%. I'm talking about taking $300 to 30,000. This is how you do it. Sorry about that, guys.
Bless you.
Okay, so you guys start understanding how money works. That's why anybody who tells me the stock market is risky, I just say you have no idea what you're doing whatsoever. You haven't even heard of options. You don't even know what swing trading is. Because you could have bought the same thing for 2 years out, and the stock would have went up 25, 30%. Your leap for a year from now would have at least went up 15, 20%. You'll be beating the stock market. That's what I'm saying, guys. A lot of this stuff is awareness of information and what's possible. Okay, it's not about money. You can turn $300. You can start a swing trading portfolio with $300, and believe it or not, turn it into like $5,000 in like 2 months. If you literally just pick good swings and you hit them right and hold them, you can do that. Okay, so my advice to you guys, I always tell people, only put in swings what you're willing to lose and build your confidence up. And then number 2, split up your capital evenly, somewhere between 2 to 4 times, so you can put an equal amount of cash into each play. There's some people who swing their 401ks. Some people swing some of their retirement, you know? I'm just telling you guys what some people do. This is how I do it. Trend lines, supply and demand zones, fair value gaps. If you've learned how to day trade from me, it's the exact same thing with swing trading, except on a larger time frame, and it's more forgiving. I mean, look at this level right here. This is a major level, a supportive resistance line right here. Here's a major level right here, just really looking at it. This level was huge. So let's say I put a support, a resistance line right here, okay? So that's my line. I want to go long here, no. But look at we come down. What do we do right here? What do we do right there? We do what? We retest it.
Yep.
So what am I going to do there? I'm buying calls. Not rocket science, guys. We went up. So let's say now this is a demand zone. Okay, and for you guys who have the perfect trade checklist, this is all in there. So let's say now this is now a demand zone, right? You want to capture this whole area. It's a demand zone. Let's say you missed this original trade. We come right back into that trade and we do the 4 horsemen. What am I doing here?
Getting calls.
I'm going long. Now I'm catching this whole entire move all the way up. All because all I'm doing is swing trading. I don't even have to monitor it. I just check it every day. If I'm in a mini swing, if I'm in a legacy trade, I just check it here and there. It's in my long-term portfolio. Any questions about this?
Hey Josh, I have a question. This is Roland. Is the 4 horsemen just like 3 inside days?
Oh my gosh, 3 inside days. Now you want to confuse me. You got me scratching my head. Oh my gosh. So I have this checklist called the perfect trade checklist. I have pictures of it in there. If you're in the Discord, I literally redropped it in there tonight. Go into the Discord, okay? If you're not, I think we sell it for like $5 or something crazy like that. Like if you go to the perfecttradechecklist.com or something like that, I think you can buy the checklist itself for like $5. It's a PDF document. And it just goes over how I think in terms of trading and stuff like that, okay? I literally break it down step by step, but it's in a PDF document. You can check it out, okay? Thing is the perfecttradechecklist.com, www.theperfecttradechecklist.com, okay? So, because I don't know what you mean by inside day. I'm sorry. I wish I did. So, I start off the day saying something, okay? People who diversify is usually because they don't know what they're doing. But even if you diversify, now I show you another way where you can increase your leverage, increase your profits, increase your cash flow in a relatively chill and safe way. Why would you not want to take advantage of this? And here's the thing, just pick 5 to 7 tickets that you like and just every day or every week, just look at them for opportunities. If one presents itself, you take it. One doesn't present itself, you don't take it. Sometimes I will tell you this, I will see 3 opportunities in the same day and I'll just buy all 3. I might say Nvidia's showing one, Tesla's showing one, and Google's buying one. Okay, we're buying all 3. Okay. I might say, okay, buy Meta and buy Amazon because it's a little bit cheaper. Options gives you options, so you have multiple options of what to do. Okay. If I'm boring you guys, I'm sorry. I just excited.
Nah, I don't even feel that way at all, man.
Absolutely not. Keep dropping as much knowledge as you feel like.
Please, okay?
Okay, so I'm just putting another tool in your tool belt and how you can actually make money and actually grow your portfolio and let money work for you instead of you working for it. I mean, guys, if I wanted to end that right now and I said, Meta, the company, lost 1%, but I made 30%, they'll call me a crazy scammer. Oh, here go Josh again. He's a crazy scammer. Like you guys literally had to see it. I showed it to you guys. It doesn't make sense to me, and I don't argue with it. As long as my money keeps printing, it is okay with me, okay? That's it, okay? And it happens all the time. I've seen it too many times for it to happen. So, what does that mean for you? I told you my goal, I rinse and repeat. Sometimes I trade the same stock 4 times. I was in Meta last week. I'm in Meta again today. How? An opportunity presented itself. So I took the opportunity. Okay. I talked about legacy swings with you guys as well. Okay. We're swinging options. Okay. I talked about that. Only putting up what you can lose. The bigger swing brokerage is what I use. I talked about that as well. Do not use Robinhood, please. Robinhood will give you a higher price than everybody else because it's a delayed platform. Okay. I told you guys about demand supply zones, trend line breaks, and monitoring on the daily 8-hour, 4-hour time frames. Okay. You can also look on the weekly time frame as well. Get out of the money contracts with the most volume and open interest. I already told you guys how I split my stuff 70-30. I went through all of this. The live breakdown, I literally just did that. Any questions, guys? Any questions for Joshy? Talk to me, guys. Anything I can answer. We've been here for
Thank
an hour.
you.
What I want to know, will we be able to get a recap of this video?
Yes, replay of the video.
All right. Yeah, because I gotta go. I'm still a little bit lost on the swing.
Okay. Watch the video over and over again, and it'll become more clear to you.
Yeah.
When I spoke in Texas, one more thing, I talked about something called Rule 1 Toolbox. And if you really want to know, like, what other gurus you're buying, right? This website has all the gurus here, and you can see exactly what they're buying. So let's say I'm looking for Warren Buffett. It literally tells me he sold a lot of his Apple. He sold 49% of his Apple shares. Why? I don't know. Okay? But look at what he's increasing. OCP, so oil and gas, is increasing those. Okay? Another thing I want you guys to notice, most of what Warren Buffett owns are in like 5 or 6 companies. So he's giving it by the S&P 500, but he's not doing it. This is Warren Buffett's portfolio. It tells you what he's buying, what he holds, how many shares he holds, okay? And the percentage of his portfolio. 30% of his portfolio is in Apple, 50% in Bank of America, 13% in American Express, Coca-Cola, Chevron. So gas. 2 gas companies are in his top 7. Just some interesting, like, if you guys want to start doing it, okay, what shares do I buy? I'm gonna buy some Apple, I'm gonna buy some Bank of America, I'm gonna buy some OCP. What did he increase? What did he hold? What did he decrease? Are you starting to notice that? And all the gurus are here, so you don't even have to Google the gurus. They're here. So you can go to Bill Aikman. I talked about this in Texas. Okay, look at what he owns, what he's increasing. Okay, what he's holding. Bill Gates, what is he holding? What is he increasing? What is he decreasing? So this is how you can also find out about new companies to buy shares of that you might like. Okay, another thing that you guys will look at this website when it comes to, so this is more so about buying shares, and there's another training on this also. I'm not going to spend a lot of time for it today. That it gives you a Rule 1 score. Okay, 180 to a 63. Okay. So this
Can
is
someone please mute themselves? We can barely hear Josh. I'm not sure who's not muted. Thank you.
You're welcome. So you can literally see by the Rule 1 score what this is. So I talked about moat management, meaning stuff like that.
Mhm.
I'll give you one of the reasons why I love Meta, okay? I'll tell you one of the reasons why I love Meta as a company. And whenever it dips, I buy it like crazy. One of the reasons I love Meta is its revenue is about 134. This is a million. So this is about $13 billion in revenue. Okay. Good. I want you to look at something. Its debt to earnings is 0.47. that
Little
means
debt.
that it literally has no debt.
No debt.
How many trillion-dollar companies do you know of that have no debt?
Not many.
There you go. So whatever Facebook goes on discount, I buy the options, I buy the contracts, whatever they got, I'm ready to buy. Okay, so there's a whole way that I literally look at options and what I buy and stuff like that. But that's another list for another day. Look at it, 100, 100, 100. There's a reason why. Here's the mistake I made. I should have bought more. About 2 years ago, let me just go to 5 years. In 2023, what does that price say Facebook dropped to?
Wow, $90.
What is the price of Facebook today?
572.
So just imagine, forget the stocks. Imagine the options contract.
Wow. Yeah, I don't like drumsticks like that.
Wow.
You see how people are building, what are you talking about? Wealth building, multiply your net worth in a short amount of time. This is how you do it.
Who the fuck is it?
In the last 2 years, Facebook has made more millionaires than real estate. If you put $250,000 in Facebook in just the shares alone, you'd have been like $1 million liquid. Now imagine the options contract. You'd have turned like 200 grand into like 20 something million. Easy peasy, lemon squeezy. So Rule 1 Toolbox is a huge tool for knowing what shares to buy, and I might do another lesson for that another day. That's fine. Now, here's the thing. I do have a call out group. What is a call out group? A call out group is a group where I have close friends and families and certain students where I tell them everything that I'm personally buying. Okay? There is a price for that. Okay? Now, what I am working on is for another admin to come into the Discord and give out option swings that he's doing. But I usually protect my call outs for myself because obviously it's nerve-wracking. Not everybody looking at what I'm doing, all up in my business. I don't really like that. I'm private. Okay. But for a few people, I do it. Now, if you want to know about the price of that, just text me privately, okay? And I'm gonna let a few people in. It's a text group and an email group, and it's literally like what you saw today. There's an email I send out exactly what I'm buying, and I give you guys an update as I'm buying it, as I'm selling it, exactly what I'm doing. So far, I've been about 100%. Fingers crossed. Nobody say nothing. Shh. Okay, I'm gonna keep my shit going. But I'll let you guys know. If you guys have my number, text me. If you don't, this is it, okay? I think I just typed in the community.
Hey, Josh, I did have one question.
Never.
So there was, I don't remember what it was, but there was one play where it was a little bit of a pullback. And so I got a little nervous and I got out. And then that joker turned around and I think it went 300% when it was all said and done.
It was Amazon.
It was Amazon. Yeah, that's right. It was Amazon. So how do you how do you know when it's just a little pullback versus a reversal?
Great question. I wish I was Houdini. I'm not Houdini, but here's the thing. The more time I have on it, the longer I'm willing to wait. And remember, on that Amazon contract, we had like 2 months.
Yeah.
Or 2.5 months, something like that. So I was willing to wait for that. If I had a week, I would cut it. Does that make sense? But even if you took that little, because I think like when you took the loss, it was like maybe 10% or something like that. Nothing crazy.
I don't even. That's the thing that makes me. I didn't take a loss. I think I was still up like 30% or so.
So you were up 30% and you cut it at 30% profit.
I didn't like that pullback.
And it went 300%.
I'm still getting used to the day trading versus swinging because like on a day trade, I'm taking it at the high. I'm out of here. And so when I saw that pullback on the swing, I was still using that day trading mentality, and I was like, let me go.
Yes. So there's nothing wrong with that. Like I said, for me, 25% is my cutoff. If I'm down 25%, I'm usually going to cut it just to keep my risk to reward ratio good. But at the same time, I understand your apprehension because if you think about it, if you put $10,000 into a trade and you're up 30%, that is $3,000 of real cash. If that's your first couple of swings, I'm not mad at you taking profit. But you've been with me for a while, Ray. You should be willing to hold some of these things. Like, come on, we're going for 300% now. We've been 100%. Like, come on, don't be taking 30% now. Like, I'm up 30%. I didn't even blink at it. I didn't even think about selling that. I was like, 30%? No. We're going to the moon. Like, if Facebook does what Facebook's supposed to do, those contracts gonna go up 300%. Watch. And on top of that, Trump just won.
I got it. Yeah,
All the stocks are going past all-time highs. That's why I called it the Trump rally. It makes sense. When I woke up today, my first order of business was today is like, Josh, which swings are you getting into? Because everything's about to go crazy. Everything's about to run up. And Meta looked right, so I bought Meta.
So with that, with the day trading, say like if we're up 30%, are we able to move our stop loss to that so it can't go under just in case if it does have a pullback?
In swing trading, you mean?
Yes.
What's the difference? If it's during the day, you can put a stop. But here's the thing: if the market closes, your stop ain't gonna work. Okay, so let's say it's the weekend, and a news comes out like, "Oh, Chipotle has E. coli virus." By the time you wake up on Monday, your shares you're clapped. I'm sorry, you're gone. Now the clap is not going to be as bad because we have time on it. It's not day trading. We have a month, 2 months on these things, so it's not going to be bad. Might be down what 10, 15% of your contracts, whatever the case may be. But stops don't work for when market is closed. They only work for when market is open. With options trading, that's the difference with swings as well. Any other questions? I hope I showed you guys how simple it is to find these plays. I'm literally doing the same thing with day trading. I'm doing trend lines. I'm just applying demand zones. It's just that I'm willing to test some stuff, start slower and then add more size. Number two, there's some swings that just make common sense. Around November, December, January, February, some of the most profitable companies are what?
FedEx, delivery companies.
FedEx, NVIDIA. So what I usually do is like, let's say starting from August, I'm going to buy a FedEx contract that expires in 6 months. This is what I call like base hits, easy money. Does that make sense? Like, for example, if I wanted to make a bet yesterday and I thought Trump was going to win, I would have just swung Tesla calls. You guys want to see what happened to Tesla today? Share screen again, Ray, so you guys see what happened to Tesla. Like, when I woke up this morning, I was just so mad. I was like, just why didn't I think about that? I should just swung Tesla calls for like a week or two because if Trump wins, I knew Tesla was going to rage because Trump and Tesla, or Trump and Elon are like, I know, buddy now. Okay, where's today?
Wait, do I have the right ticker? It's TLSA, right?
Yeah, TSLA.
TS. Okay, there we go. There we go.
Okay, look at what happened to Tesla. Look at this. You see that jump?
Good grief.
You see that jump? That's in 24 hours. If I was thinking, I should have just said, Josh, just go dump a whole bunch of money to Tesla swings and put some time on it. Because if Trump wins, Tesla is raging. Look at that. Tesla just jumped.
Is that considered a fair market gap?
Yes, this is what we call we just call it a regular gap, okay? Or a gap that is created based on news. Okay. So if I was just thinking yesterday, I don't know why I wasn't thinking yesterday. Somebody should have told me. I was like, if Trump wins, Tesla's gonna rage. Just put like 10 grand in that and look, I would have doubled my money overnight. Look at that push. Just rage. Boom. That's why I knew that. That's why I got into Meta because I know, okay, Trump won. The S&P 500 is about to start going crazy. Tech is probably going to be the first leaders. Which tech stock was lagging behind? So I looked at Tesla. Okay, Tesla's already gone. So I couldn't trade Tesla at open. We'd already raged. And then I looked at Google. I was like, oh, no, that one's already gone. I looked at Amazon. That was already gone. I was like, okay, Meta looks like it's underperforming. I sniped Meta.
Mm.
So, Josh, you said you've been trading since 2016, correct?
2015, yes.
So, out of all your years of trading, which, in your opinion, which have you been more profitable as far as which party has been in office?
Which one have I been more positive of? Who's in office?
Yeah, which, like, as far as Democratic or Republican, as far as the president is in office.
I don't even track that. I'm just possibly regardless because I'm following a trading system. The things that make sense. Just simple trend lines, guys. Like I promise you, it seems so simple. I know somebody who only swing trades. She takes like 5 mini swings a month or 7, and then she makes like 23 grand. And that's her form of swing trading. So she'll literally put like her name is Tori. Like she'll literally put like 10 grand in this, and her whole trading strategy. I promise you, I cannot make this up. Let me request access to your screen. Her whole trading strategy, honestly, is trend line. She'll literally say, okay, if we break this trend line right here, let me learn how to draw a trend line. If we break this trend line right here, I'm going long. You guys see that trend line?
Yep.
Okay. Imagine if you went long right here in calls. Oh my God.
Wow.
Should have cashed out today. And all she does is trend lines. And as long as we don't break below this trend line, she stays in the trade. That's her whole trading system. With swings and larger time frames, it makes it easier to do that. You don't have to be as technical, but you have to be willing to wait. Sometimes it's not going to just jump up in 24 hours. Sometimes it might be like this, where it hangs around in the same area for about 3 to 5 days. But on the 6th day, boom, you get that jump. On the 7th day, you get that jump. So you have to be willing to wait. You never know when the volume when volume is going to come to that trade. All you can control is your entry and your positioning. Are you guys checking that?
Yeah.
That's the T. Hope this was helpful, guys. Was this helpful, guys? Did you guys help? Let me know in the chat.
Very, yeah.
Absolutely.
Yeah.
And Josh, I know everybody's comfort level is different, but how many different swing plays would you be in at one time?
The max I've ever been in at one time for my mini swings is about 3 or 4. For my leaps, I'm in like 10, 15 at any given time. Because I'm in, those are long-term ones. So like I'm always adding to my Apple. I'm always adding to my Nvidia. I'm always adding to my Teslas, my long-term swing options. Does that make sense? So that one is not, I wouldn't be concerned about as many plays you're in. But as far as the mini swings, about 3 is usually my max that I'm going to be in at any given time. Candy, why you look at me like that? You look like I said something that you know that doesn't make sense. Please ask me.
Nah, you got me in thought about it. It's something that I gotta like. That's real money, so it's something I gotta back test and make sure I'm knowing what I'm doing before I.
Yeah, guys, definitely back test this. Like literally, go and do your paper trade. That's how I started. I paper traded swinging for 3 months before I started using my own money.
Yeah, that's the hardest part, right? Because it seems so easy, and you want to get to the money right away, and you know it's a
And
process.
guys, you don't have to start with a lot. You can start with $50, $100. Like remember, I showed you guys how to go down the trade. So, like for example, if I was to do Tesla here, I go to trade, and I go to the next month, I could buy a contract for $7. Look at that, 7 cents, $7. Does that make sense? I could buy one for $121. This doesn't have to be a thing where you're like, oh, I'm gonna put 20, 40, 60. But if you can, more power to you. Just start where you are. This is not a contest about who's the best or who has the biggest amount of capital. This is about growing your money at a steady, independent rate, which is why I said whatever amount of capital you have, split it into 4. Now you're diversifying your risk across 4 swing trades. That makes sense.
I like it, man. Appreciate you, man. Appreciate the
You're
time.
welcome. You're welcome.
Yeah, this is a game changer.
That got me working on the Wednesday. Oh my goodness.
Hey, man,
So
that's love.
Yeah, this trade.
thank you guys. Thank you guys. I'm working on getting one of our admins back who like all he does is swing. His name is King Sumo. I'm working on it. We're talking so that if you guys want to see just how other people swing and stuff like that, he can be in the chat, not making any promises. But there's something that I am thinking about and working on too for everybody who's already in Discord. Okay. But honestly, I'm the type of person who I love my own analysis. And if I'm calling out something, you're gonna know why. It's because it's not gonna be anything mysterious. You're gonna like I expect. I always look for the same thing. So just want to give you guys another tool. Hope you guys enjoyed it. The recordings. If you email admin@optionstoppers.com and request it, I will send it out. Just send us an email to say like replay please or something. And then I can just have somebody send it out. Guys, hope this helped. Honestly, I'm not trying to stress you guys out. Just want to show you guys what I do. And I'll keep you guys updated on this meta play. If you guys are interested, I'll let you guys know how it turns out.
Thank
Ciao.
you, Josh.
Ciao for now.
Appreciate that, Josh. Thank you.
Thank you.
Thank